Hey everyone, welcome back to Corporate Decoder. Today H.B.A.N Incorporated just filed its latest 8K report, and I'm seeing a clear picture of their dividend strategy. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is keeping its dividend payouts consistent for both common and preferred stockholders. Huntington Bankshares Incorporated, known by its stock ticker H.B.A.N, released some important news on the 23rd of July 2026 regarding its dividend payments. This filing, an 8K, is essentially a public announcement of major corporate events. The main event here is the declaration of dividends. Think of dividends as a company sharing a portion of its profits with its shareholders. Huntington Bankshares is paying out dividends on several different types of stock, including its common stock and various series of preferred stock. For its common stock, the dividend is set at $0.155 per share. This isn't a change from the previous quarter, which signals stability for common shareholders. This payment is expected on the 1st of October 2026 for anyone who owned the stock as of the 17th of September 2026. Now let's talk about the preferred stock. Huntington has several series of preferred stock, and they are also receiving their quarterly dividend payments. These include Series B, Series F, Series G, Series H, Series J, and Series J, and Series L. The dividend amounts vary for each series, reflecting different terms and dividend rates. For example, the dividend for Series L non-cumulative perpetual preferred stock is $343.75 per share or $0.34375 per depository share, with a payment date of the 20th of November 2026. These dividends are crucial for the holders of preferred stock, who often rely on these fixed income streams. The market typically watches these dividend announcements closely. Consistent dividend payouts can be a sign of a company's financial health and its confidence in future earnings. For Huntington Bankshares, maintaining these payments suggests a steady operational performance, especially with the common stock dividend remaining unchanged. This filing with the Securities and Exchange Commission, or SEC, is a standard procedure for publicly traded companies to ensure transparency with investors. The details provided cover the specifics of the dividend amounts and the dates shareholders need to be aware of to receive these payments. Huntington Bankshares operates as a regional financial services provider, and its stock is traded on the NASDAQ under the ticker H.B.A.N. They have a substantial number of employees, over 26,000, and their current stock price is around $19.82, with a 52-week range of $19.61 to $22.23. The company's common stock and several series of its preferred stock are listed on the NASDAQ Stock Market LLC. There are also other exchanges mentioned like NASDAQ Texas LLC, but NASDAQ is the primary trading venue for their securities. This widespread listing ensures accessibility for a broad range of investors. The document also references an attached press release, which would contain a more detailed explanation of the announcements. This is common practice, where the formal filing points to a separate, more accessible communication piece for the public. Looking at the broader context, institutional investors like eShares Trust and Invesco Exchange. Traded Fund Trust II holds significant stakes in Huntington Bankshares, particularly within their preferred and income securities ETFs. This indicates that these types of securities are a key part of diversified income portfolios for many large investment funds. The consistent dividend payouts are likely a major factor in attracting and retaining these investors. From a broader perspective, the decision to keep dividends steady is a signal of management's confidence in the bank's earnings power and its ability to navigate the economic environment. In the financial sector, stability in dividend policy is often rewarded by the market. This move by Huntington Bankshares aligns with that sentiment. What I am seeing here is a company that is not making sharp, dramatic moves with its dividend policy. Instead, they are opting for consistency. This can be interpreted as a sign of maturity and a focus on delivering reliable returns to shareholders, especially those holding the preferred stock who are looking for steady income. While there are no radical changes, the very act of maintaining these payouts across multiple preferred stock series, in addition to common stock, is a positive indicator of their financial stability. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.